We all know Apple, from the revolutionary iPhone to the sleek Apple Watch. Apple has changed how we communicate, entertain, and navigate our daily lives. But it seems like being a tech giant is not enough for Apple, because the company is now positioning itself to become a financial giant. Today, we are going to explore how Apple is slowly taking a giant bite out of banking and what it could mean for the future of banking. What are those strategic moves that Apple is making to become a banking genius? Stay tuned to find out. Let's start with how Apple entered the financial world. Apple's journey into the financial sector started in 2014 with one simple tool, Apple Pay. Apple Pay was designed to digitalize your wallet and also to enhance the security and ease of each transaction. The focus was on simplicity and security in financial dealings. By using NFC technology, Apple Pay allowed users to buy things by simply holding their Apple device, whether phone or watch, near a payment terminal. This innovation of theirs was one that was not only convenient, but also strategic. Apple Pay being used meant that Apple was not only selling devices, but they also became important to every interaction made with them. But Apple did not stop at just creating Apple Pay. They continued to develop and expand it with each iOS update and each new device. This meant that merchants all around the world started using Apple Pay because they were impressed by how easy it was to use, and also because of their trust in Apple as a brand. From groceries to gas stations, you can use Apple Pay anywhere. In 2019, Apple took a huge step by launching the Apple Card. To do this, they partnered with Goldman Sachs, and they were able to introduce a credit card that was completely integrated into the Apple Wallet app. If you've used Apple Pay, then you know that it is very easy to use. From the application process on, everything is seamless. Plus, there are no fees, and you even get daily cashback rewards. It makes sense that it was well received by users. With the Apple Card, users are able to get detailed analysis of their spending habits, and every transaction is neatly categorized. So, not only did Apple enter the financial world, they set a new standard for personal financial management. We can see that from just an app for payment on your device, Apple has gradually grown its financial sector to a proper one where users are picking it over others in the market. But at the end of the day, Apple Pay is still a digital wallet. So, how does Apple plan on using it to get to a point where they're integrated into banking? That's what we will be talking about next. So exactly, is Apple positioning itself to become consumers' bank right under their noses? Well, we already know that Apple entered the financial world with Apple Pay, but how do they plan on being in banking? Apple Pay and Apple Card were just the beginning of Apple's financial ambitions. The final goal is for Apple not to only handle your transactions, but also to become a central hub for your financial life. Recent rumors and insider reports have hinted at a future where Apple might offer savings accounts and investment products. So just imagine opening your Apple Wallet app and you are not only able to pay for your coffee, you are also able to check your savings growth or adjust your investment portfolio. Sounds like a good idea, right? The fact that Apple has so much important data on consumer spending habits makes this idea even more plausible. And they got this data through Apple Pay. With this data, they could tailor financial services that are uniquely suited to individual users, and also offer personalization and predictive assistance that no other brand offers. Apple's approach could also bring new ideas to financial inclusivity. By integrating new financial services directly into devices owned by millions, Apple could provide financial solutions to those underserved by traditional banks, which could potentially reduce the barriers that stand before financial entry. If Apple manages to make these expansions, then the effect would be massive for you and I as users. For example, Apple just acquired a startup that specializes in AI and finance. What this could mean is that there might be a future where your financial decisions could be enhanced by intelligent algorithms that learn from your habits and preferences. So, you could do away with physical financial advisors because you have your own personal financial advisor in the form of an AI that knows your every spending habit. Apple could also move into peer-to-peer lending. What this means is that Apple could enable users to lend money to each other with minimal risk, which is something that traditional banks are not doing right now. By leveraging the trust and security built into their ecosystem, Apple may be able to provide something that traditional banks are not able to, and through this day, they will be taking a huge bite out of banking. However, as exciting as this seems, they also raise questions about privacy, data, security, and the role of big tech in financial regulations. So if Apple does become a full financial service provider, these issues will be very hard to ignore. So I'm sure you're wondering, well, what's the deal? What's going to be different between Apple banking and just normal banking? The only reason Apple is standing out from the traditional banking we know and are used to is because they're doing some things differently. And as Apple continues to carve out its space in the financial sector, traditional banks are finding themselves at a crossroads. They are being challenged by the convenience and technological superiority that Apple presents. And before Apple takes over banking, these traditional banks have to make big moves as quickly as possible. Firstly, although traditional banks have always been the pillars of financial trust and security, the rise of digital finance, especially by tech giants like Apple, is making customers have different expectations from their banks. For example, nobody is going to open an account with a bank that doesn't have online banking. It is just an expectation that every bank would have online banking because you've come across some that do. Customers now also expect the same level of efficiency and integration in their financial dealings that they get in their communications and entertainment. I mean, if it's all technology, why should online banking be less seamless than a streaming service? There's also the fact that Apple is doing more to entice its customers than most traditional banks are doing. Let's take a look at the Apple Card. It comes with no fees, daily cash rewards, and a cleaner, concise financial dashboard. So many traditional banks are struggling to offer even half of these things to their customers. The Apple Card's integration with the iPhone makes sure that users are constantly engaged with Apple's ecosystem, and this means that they are not very likely to switch to a competing product. Apple's mode of entry into the financial world also makes it stand out from traditional banks and other financial companies. Because Apple already has an established customer base, they entered the financial world with a loyal customer base that was willing to try out their innovation because it was from Apple. So it is very likely that if Apple were to make a move to have a bigger place in banking, they would be very much supported by their customers. But the traditional banks are not folding their hands either. They have been responding by increasing their digital transformation strategies. By investing in blockchain, artificial intelligence, and personalized banking experiences, they are trying to keep their customers from running to Apple Pay. But how much can these steps they've taken really help if they are not able to integrate these technologies as seamlessly and broadly as Apple can? At the end of the day, Apple is a tech giant, and they are just, well, banks. The good thing that comes from the struggle between traditional banks and Apple is that as a customer, you get to reap the fruit of their competitiveness. For example, banks are now rethinking their fee structures and customer service approaches simply because Apple has a more transparent and customer-friendly model. What this means is that whichever one you choose to use, you still get quality service because neither side is going to slack off and risk losing customers. But what does the future hold for Apple in banking? A lot, it seems like. Imagine a future where your iPhone manages not only your text and your calls, but also your savings, investments, and even loans. Apple has been slowly taking a bite out of banking with their innovations of Apple Pay and Apple Card. But will they take an even bigger bite in the future? Is it possible that there will be an Apple Bank sometime soon? As we come to the end of this video, we would love to know what you think about Apple's moves. Are you excited for it? Or do you think they're biting off more than they can chew? Let us know in the comment section. If you enjoyed this video and found it useful, please like, share, and subscribe to this channel for more like this. Bye for now.